My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 28th, 2021, and Bitcoin is looking stagnant. Okay, it's looking stagnant, but it's not at all stagnant. It's just performing a complex triple three complex fourth wave correction. Okay, and the reason it's doing that is most likely for this reason. Stay tuned. Also, the title of this episode is why this crypto can most likely 3x in the month of December. Okay, for those of you subscribed to this channel, we don't typically do that kind of clickbaity stuff. So this is not clickbait, okay? This is for real, all right? We're typically just focused on trading techniques, explaining price action, right? And really analyzing the charts. And, using Bitcoin, we trade Bitcoin up and down, okay? And you use that as a proxy for other cryptocurrencies. But I'm going to go in this video why I'm not touching Bitcoin in December. Okay, I'm going to give you a reason why. All right, and lastly, we're going to talk about ETH and what ETH is doing. All right, so let's get into it. Watch until the end for all of this information. All right, moving in on Bitcoin. All right, we're in a 5-wave trend down. Right, 1, 2, 3, 4, 5 waves down. We have not yet reached our target, and zooming in to the 15-minute time frame, we can see that we're kind of stagnating at this level in this range, and this is what we call a very quickly draw it out, a triple three. So we have a double three complex correction, and this is a triple three complex correction. So you have W, X, Y, X. Oh, goodness. Let's try that one more time. W, X, Y, X, Z. Something like that, okay? So the correction should be over, and we should go into our 5th wave, okay? And why do we have a double three or triple three? You don't frequently see triple three corrections. Usually you see double three complex corrections, but I believe that we got this triple three because this 2 wave that you see here was uncharacteristically short, and the retracement was uncharacteristically short in its duration as well as in its retracement. Okay, we know according to Elliott wave principles, they're not rules because they're principles. Sometimes you get exceptions, like in this case, the second wave is meant to retrace to at least the 382 of the 1 wave. Okay, here we got a retracement to the 236, so that's uncharacteristically short. And the other thing is, this is supposed to normally last a little bit of time. After an impulse like this, you're usually supposed to give market participants some time to decide if they want to stay in or get out, right? So it only lasted 2 hours, whereas the impulse itself lasted 6 hours. So that's just uncharacteristically short, right? And so I believe that price action is giving, and I'm personifying price action here, but price action is nothing but a reflection of our psyche. It's a natural phenomenon, and that phenomenon is the human sort of psychology, the human psyche, are buying and selling patterns, right? That's basically all that price action is, our fear and greed. So this is natural, and it does follow cycles, and it does have balance, just like anything else in nature. So here's the rebalancing, or the attempt to rebalance this. This is what I'm thinking. This is what I'm seeing. This is what I see in the charts, right? Just like Elliott wave guidelines state, the 2 wave and the 4 wave are always going to be in balance, right? Usually not always, but usually going to be in balance, right? If you get a simple 2-wave correction, you get a complex 4-wave correction, and vice versa. So this is not out of the ordinary. Like if I see a 333 correction here, I can kind of understand why, okay? But knowing what's going on in the charts, given that we're seasoned chartists, we're not afraid, we're not spooked, we're not surprised. We're still looking to take profit here. We're waiting patiently for this to complete and then for a 5-wave to complete and to take profit on our short. And we're all right because everybody's long now. Most people are long. The funding fees are such that they're paying us to short right now because the end of this impulse is near, and we know that, but we're still waiting for our profit very carefully or very patiently. All right, 3 ways to get this 5-wave target. Of the 3 waves, this is the most accurate using this. Basically, the bottom of this and the top of this and the inverse 1618 of that. So on this chart, that would be something like 52.4, okay? Now, the other way, before we had this double or 333 form, we could have taken the larger degree, let's go on the hourly. We could have used the inverse 1618 of the larger degree fourth wave, which is basically the bottom of this fourth wave and the top of this fourth wave. And that should give you something similar, but not as precise. So 52.52, okay, on this chart, okay? And then the last way we know that we can take 5-wave projections is using the wave 3 and then retracement to wave 4 with the Fibonacci extension tool. Basically, the top of wave 3, something like this. Okay, I'm not going to get too precise. And then the retracement of wave 4, and you see that gives you, so the 618 of that, which would give you 53.9, okay? Which we know that is, well, let me just fix this because I don't want to give you guys the wrong idea that this is completely inaccurate. It's not as accurate, but it's not completely inaccurate, okay? So that would be, sorry. Let me think. Yeah, that's right. The 618. So 53, 5, 6, 7, that's not giving you what you want, right? That is not the end of the 5th wave. The end of the 5th wave is a little lower than that. But anyway, those are the 3 waves that you can project a wave 5 terminus, and you basically use whatever you have. If you're all the way up here, or you're in here and you just completed the wave 4, or you're about to complete the wave 4, you can kind of estimate with this tool. And if you have a completed wave 4, then you just take the inverse 1618 of that wave 4. If you have a smaller degree complete wave 4, you take the inverse 1618 and you fine tune your target, okay? And that shouldn't have changed really, because the bottom of this 4th wave and the top of this 4th wave are still the same. They haven't changed in about a day and 2 hours. Okay, so that's Bitcoin for you. This is why we're still waiting to take profit, and we expect another wave down. Okay, now after this, you're going to get some sort of consolidation, a mini consolidation, and it's going to look something like this. All right, you're going to get an A wave, right? A B wave, something like this, to come back down, and then a C wave, right? A, B, C, and then I like to long after the 2 wave of the C wave. I like to wait for confirmation, okay? And that's when you start longing. Now, I said this in the YouTube chat yesterday, I'm not touching Bitcoin in December. Why? Too much risk, okay? So this is going to be a 2-wave correction, we know this, and it's likely to retrace to between the 0.5 and the 618. Okay, that's what probability sort of states. In the backtesting in the Elliott wave theory, we know that 2 waves, why am I, Okay, let's go to the 4 hour. I'm sorry about that. 2 waves typically retrace to between the 0.5 and the 618 of the 1 wave, okay? So we're expecting it to come all the way back here. That would be a gain of 17 to 20%, 15 to 20%, okay? That's great, okay? And that may last, maybe a month, maybe 2 weeks, who knows? But this this 2 wave can look all kinds of ways. Let's say it's just a simple zigzag. We all know that a zigzag is comprised of a zigzag is comprised of a 5-3-5. A flat is comprised of a 3-3-5. Okay, 3 waves, 3 waves, 5 waves, 5 waves, 5 waves, 3 waves, 5 waves for a zigzag. Now, who knows what it's going to be, right? Let's say it's a flat, right? Something like this. And usually the B wave retraces on the origination point of the A wave, and then you get your 5 for your C wave, okay? Let's say it looks something like that. Where do we set our stops? If we get in here, okay, maybe we take profit here, okay, and take that measly 8 to 10%, okay, and then we just sit on our hands for the rest of the time, okay? That's not that good of a plan. What if we take profit here and then wait for this to happen and then try to get back in? That's just too risky. Again, when you're trading, you want plans that happen, they have minimized risk and they maximize upside by showing high probability outcomes, by not playing around in corrections. And that's one of the reasons most traders don't trade counter trend. And although this is a larger degree retracement, right? This took about 20 days, and this should take maybe, 15, 30 days, something like that. And it's a potential 20% gain. We don't know what it's going to look like. It's going to be a zigzag. It can be a flat. It can be a complex correction. We do not want to expose ourselves to all of that risk. This is why I'm saying I'm not going to trade Bitcoin, because it's in a corrective mode. And we all know corrective modes are capricious, they're unpredictable, and they're too risky. And for 20%, that's not really worth it. So this is why I've been looking for other assets, okay? And the first one I looked at was Ethereum, okay? And I like to trade coins, tokens with high liquidity. If I'm trading leverage, I trade high leverage. I look for high liquidity. I look for, I don't need some sort of small micro cap. I need a nice charts that have a lot of data, and I need high liquidity. And I just ramp up my leverage to my liking to make it worthwhile, okay? So this Ethereum chart, first and foremost, let's go into the right Ethereum chart. And because we haven't really looked at Ethereum on this channel, let's take a quick look on a larger time frame. And we see that we've had, a correction here. This looks like the end of a C wave. This looks like an A wave, right? A, B, C. This looks like an A, B, C. This looks like a B wave. This looks like the end of a B wave. We look like we've been in a B wave ever since March, just like Bitcoin, okay? And this B wave retraced to between the 1.236 and the 1.618 of the A wave, and that is indeed correct, right? So this is a typical B wave, and we know what comes after B, right? The C wave, which is 5 waves down. However, this is on the weekly time frame. On the smaller time frames, we have an opportunity for longing. This is why at first I was like, I'm just going to trade ETH. It's going to be going long anyway. And if we zoom in, we see that there's a smaller B wave that's yet to be printed on ETH, okay? And this smaller B wave will offer a long opportunity of about maybe 35%, which is great, okay? ETH may come up to $5,000, okay? And we just take the quick, let's remove this fib. Whoops. let's remove this fib. Let's take the quick fibs on this A wave. And let's see that, you see that B would end up between around $5,000, okay? So if we long that, like I said, you'd get about 35%, maybe 30%, okay? 25, 30%. That's not a bad opportunity. However, again, it's a B wave, and B waves are not C waves, so they're not entirely impulsive. We know that B waves can look something like this, okay? They can look something like that, okay? They can look however they want. You know that the only impulsive part of the B wave is this last portion here. Whoops. This last portion here, which is the C wave. So you can be trading this portion here, and it's kind of risky, but you don't know what it's going to look like. You don't know what this retracement is going to look like or when it's going to be given to you. You don't know. There's a lot of uncertainty. You know that it's going to be in 3 waves, but you don't know what those 3 waves are going to be. Okay. And this is why I'm saying Ethereum's better than Bitcoin. At least it's in a trend that's going up, right? It's not a counter trend. This B wave is kind of going to be, going long and 35%, but it's still, there's mess, right? I want straight impulse. If I'm a trader, I'm going to risk my capital. I'm going to risk my capital in a measured way. And that's why I've looked even further for a better opportunity. And this coin is the one that I believe can not only show us some great impulse, wrong chart, but the gains, the potential gains are great. And this is Chainlink. And Chainlink, some of you may laugh, Dean, Chainlink's been horrible. It's arguably the worst performer in the top 10 for this, entire year. And I'd say correct. More of a reason why it's just due, okay? But I'm not thinking about what it's done in the past nor necessarily. I'm just looking at the chart, okay? And looking at the chart, I know this looks like Greek to a lot of people, so I'm going to break it down really quickly. 5 waves up, okay? That's the sort of impulse from December 2020. After 5 waves, you get 3 waves. Focus on this blue correction, this larger ABC correction, okay? That's what we're looking at. We have completed the A, B, C. So remember, everything is 3 waves when you're talking about corrections. So this ABC correction of the A wave already happened. Let's delete it. So let's make it a little cleaner, okay? So now we have the B wave, okay? We know the B waves also come in A, B, C, right? When you're talking about flat corrections, you get, again, 3, 3, 5. 3 waves down, 3 waves up, 5 waves down. And you're talking about a correction to the downside, okay? So 3 waves down, got that. 3 waves up, unlike Ethereum that has yet to create its smaller, right, different degree, right? But basically what you're longing on Ethereum is a mini B wave. And this portion is kind of like the unpredictable, we don't know what it's going to look like portion. You kind of long this, but you're, are you shorting that? Are you waiting? It's messy, okay? Here, we clearly have A, B, C, or sorry, A, B, okay? So this is the A wave. This flat correction is the B wave. This is going to complete. All that's left is this impulsive C wave. That's what we want to long. This is why this is a great opportunity. You're in log. You see that the A wave, pulling the fibs from the A wave to the top, from the top to the bottom, you see that the B wave is likely to come back to at least around $60, at least $53, right? Because that's the one retracement, but most likely $60. Right now, we're around $20. That's your 3x right there, okay? So if you find a great entry for this and you're long and you just wait, you add some leverage, that's a great trade. So this is what I'm anticipating. This is why I'm trading Link, not Bitcoin, not Ethereum for the month of December. I hope this was helpful. I hope this was useful. Leave your comments, leave your questions, and I'll get to them in the YouTube chat. Have a great day. Bye.